Every trading forum repeats the same rule. There is a best day to buy stocks. Buy on Monday, they say, because it is the weakest day. So we scanned 35 years of market data to test it. The verdict? The best day is basically a myth. Here is what the data actually shows. First, how we tested it. For every trading day in 35 years of history, we bought at the open, then measured the return 1 day, 1 week, and 1 month later. Then we grouped every outcome by the weekday you bought on. Real matches, counted honestly, no forecasts. Buy the S&P 500 on any weekday and hold a week, and you win about the same, 56 to 60% of the time. Wednesday edges ahead, Monday and Friday lag, but the whole spread is just 4 points. Hold for a month, and even that gap nearly disappears. So what about buy on Monday? It is folklore. It comes from a Monday effect that academics found back in the 1970s, and it faded once everyone knew about it. Today, Monday is actually one of the softer days for a quick trade, not the best. It shifts stock by stock, too. Apple, Microsoft, Nvidia, each carries its own quirks. But across the biggest names, if any day is weak, it is usually Monday or Friday. There is no clean, tradable best day that every stock agrees on. Here is the part that actually matters. That 4-point weekday swing. The market condition you buy into swings your odds by 16 points. 4 times more. The calendar is noise. The setup is the signal. Buy a dip inside a bull market, and your 1-week odds jump to 64%. Buy into a dead calm, low volatility tape, 66. But buy blindly into a bear market, and it is a coin flip. Same weekday, opposite outcome, decided entirely by the setup. And these patterns drift. Run the same test on just the last decade, and the ranking reshuffles. Any edge this small and this unstable is one to hold loosely, never to build a plan around on its own. What about the best time of day? The rule that says wait until 10 in the morning before you trade. Same story. A fixed clock that printed money would have been arbitraged away long ago, just like the Monday effect. Treat it with the same skepticism. So here's what to actually do. First, name your hold period, because a 1-day trade and a 1-month hold do not share an answer. Then stop trading the calendar and start trading the condition. The setup moves your odds. The weekday barely does. Want the odds for your own ticker and your own setup? That is exactly what Trade Odds does, scanning 35 years of history against 17 market conditions in seconds, so you are reading the real base rate, not a rule of thumb. Try it free at tradeodds.io.